Alphabet reported second quarter earnings July 23rd, beating revenue and profit expectations. Google Cloud continues to be the best performing segment with ad and subscription revenue building on momentum. With a PE below the S&P 500 and now paying a dividend, investors still weren't happy. Revenue was almost $85 billion, up 5% sequentially and 13.6% from Q2 2023. Gross margins remained buoyant at 58.1%, slightly better year over year. Operating profit was $27.4 billion, up 8% from last quarter and 25.6% from last year. Operating profit margin is 32.4%. The bottom line came in at $23.6 billion, better by 28.6%, with a net profit margin of 27.8%. The 9-quarter income statement bar chart gives us a nice snapshot of Alphabet's steady performance. Revenue growing 2.2%, gross profit 2.45%, operating margin 3.9%, and net income 4.4%. Not too bad for a $2 trillion company. Revenue by segment for the last 9 quarters show Google Advertising in blue as the primary breadwinner. They reported $64.6 billion, or about 76.7% of total revenue, down from 81.4% in Q2 2022. Advertising was up almost 5% quarterly and 11% year over year, having grown 1.5% in the last 9 quarters. Google's subscription business line in red reported $9.3 billion, up 6.7% quarter over quarter, 14.4% year over year, and 4% overall. Subscriptions are 11% of revenue. Google Cloud, the best performing business line, generated more than $10.3 billion, or 12.3% of revenue, up from 9.1% in Q2 2022. Cloud was up 8% from Q1, 29% from Q2 2023, and 5.7% overall. A deeper dive into Google's advertising segment put Google Search in blue at the top of the list, reporting $48.5 billion, or 75.1% of the segment, up from 72.3% in Q2 2022. Search was up 5% quarter over quarter, 14% year over year, and 2% for the last 9 quarters. YouTube ads earned almost $8.7 billion, up 7% from the last quarter, 13% from last year, and 1.9% from Q2 2022. YouTube ads comprises 13.4% of segment revenue. Google Network has been struggling with just 42 basis points better from Q1, but down 5% from Q2 2023. It is down 1.2% overall. This business line generated $7.4 billion, or 11.5% of revenue. The geographic footprint of Alphabet sees the United States in blue as the biggest market, generating $41.2 billion, or 48.7% of total. It's up 6.4%, 17.5%, and 2.6% respectively. EMEA, shown in red, earned $24.7 billion, or 29.2% of total revenue. That's better by 3.8% sequentially, 10.8% year over year, and 2.1% in the last 9 quarters. APAC in yellow produced $13.8 billion, or 16.3% of global revenue. That's improved by 4% from Q1, 8.6% from Q2 2023, and 1.9% from Q1 2022. Other Americas in green, the smallest segment, almost earned $5 billion, about 5.8% of sales. Growth here has been 6.1% sequentially, 9.5% annually, and 1.44% overall. Let's look at the fundamentals now. Earnings per share were $1.89 when $1.84 was expected. Alphabet's PE is 26.34, below the S&P 500 of 29.03, with a PEG ratio of 0.43. Sales per share were $26.27, up 5.5% and 16%, giving us a price to sales of 7 times. Book value is $24.07, also improved. Price to book value multiple is 7.63. Cash per share is $2.18, and cash plus marketable securities per share is $8.06, giving us a cash to price ratio of 22.8. Alphabet has huge short-term investments, so it makes sense to include that in the ratio. The debt ratio is 0.03, as Alphabet has very little debt. Debt to equity is 0.04. Interest coverage is 409 times. Short-term liquidity ratios have the current at 2.08, quick at 1.9, and cash at 0.35. Return on assets is 21%, return on equity 29%, return on capital employed is 29%, and return on invested capital is 28%. Alphabet's effective tax rate is 13.6%, giving us a NOPAT of $84.6 billion and has an average debt and equity of almost $301 billion. Huge cash flows from Alphabet, operating cash flow at $26.6 billion, investing outflows of $2.8 billion. Cash outflow from financing was $21 billion. Google bought nearly $15.7 billion of stock. Free cash flow to the firm is $27.2 billion, which is a 84 multiple to price. Alphabet paid their first dividend of 20 cents, yielding 43 basis points, paying out 10.4%. The enterprise value of Alphabet is close to 2.3 trillion. This is 7 times revenue, 20 times EBITDA, 23 times EBIT, and 83 times cash flow. Key takeaways from the report: on the pro side, the revenue growth across businesses continues. Margins were strong, lots of cash, buying back more stock. Cloud keeps growing, diversifying revenue from traditional advertising. On the con side, we really couldn't find anything weak about Alphabet's business, but perhaps the share price at all-time highs and the government's trial on its alleged monopoly. That being said, we rate Alphabet a buy. We do own some shares. Like and subscribe.